Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 8th of March 2021 and we're reporting that yet again gold and silver prices have fallen. So let's take a look. Last week we produced two quite important videos. Silver crashes, but how low will it go this week? And gold hits 8-month lows as equities fall too. And then on Saturday our gold and silver weekly update for the week ending the 5th of March. Now we've placed links to all three of these below. Now we saw in the update that gold fell $33 last week to $1,701. And silver fell $1.45 to $25.24. Now, since our video had been published, the Senate approved Biden's $1.9 trillion stimulus plan. See, the Senate, led by Majority Leader Chuck Schumer, voted, as we anticipated along party lines on Saturday, to approve the COVID-19 relief plan, which includes a $1,400 stimulus check for many Americans, $350 billion in aid to state and local governments, and an extension of federal unemployment benefits. The Democratic-led House now plans to vote on the Senate legislation on Tuesday, so that Joe Biden can sign it into law early in the week, according at least to House Majority Leader Steny Hoyer. Democrats are racing to pass the package before enhanced unemployment aid lapses on Sunday, March the 14th. So they have to get it done. While many would have expected gold and silver to open up on the back of this news on Monday morning. And in the first 2 hours of trading, it did just that. And we saw gold rise to $1,714, but has since fallen back and lower to $1,682, just $5 off its day's low of $1,677. Silver did virtually the same in the first 2 hours, peaking to its day high of $25.93, and is currently resting at $25.14, having actually been as low as $25.02. In other words, gold is down $24 on the day so far, and silver is down around 10 cents. Key reason, the dollar index is up quite strongly, in fact by 0.43, and stands at 92.41. Now in our weekly update we concluded with the following statement, quote, "So our price predictions for this week allows for the fact that there does seem to be a continuing downtrend in gold. Though in fairness, the dollar will not go on strengthening forever. And if the budget is passed, though, investors may go back into equities, at least in the short term. Therefore, we see gold still under pressure and now trading between 1,600 and 1,800, with 1,550 and 1,800 as outliers. Silver is likely to trade between 2,450 and 2,650, with 24 to 27 as outliers for this coming week." Unquote. Well, the equity markets in the UK and Europe were in fact high, closed higher, between 1% and 3%. And the Dow and S&P 500 just prior to the close a little changed, with the Nasdaq continuing its decline down 2.4%. Though both the Dow and S&P rallied initially on opening, with the Dow again reaching an all-time high today. Bitcoin, incidentally, is up around $182 at $50,832. Now, as we've frequently reported, gold will now likely test the June lows at 1670. Came very close to that figure today. And resistance is now identified at the 10-day moving average of 1737. On silver, Christopher Lewis on FX Empire, whom we often regard on occasion to be a little bullish, too bullish sometimes, but very sound in fairness on the technicals. This is what he published earlier, quote, "However, if we were to turn around and break down below the 200-day EMA, the market could go looking towards the $22 level. To the upside, if we were to break above the 50-day EMA, then silver could probably go looking towards the $28 level. But I do think that silver is going to have a lot of issues as long as interest rates in the United States continue to climb. Pay attention to that 10-year note. It's causing havoc across the world. The 1.6% yield is at historically high levels, but the fact that we got there seemingly overnight has a lot of people concerned. That being said, I do think that eventually silver becomes a very hot market, so I have no interest in shorting regardless of what happens next. I'm looking for signs of support or momentum to the upside in order to get to the upside," unquote. Well, yes, indeed. The 10-year Treasury rate jumped towards the 1.6 level, actually exceeding that slightly, while the dollar strengthened. Investors are now looking forward to the prospect of a surge in economic growth as vaccine distribution improves and the US heads towards passing its $1.9 trillion spending bill. The risks associated with rising Treasury yields, the result of fears that government aid programs could overheat economic growth, are real and concerning. Kim Stafford, Asia-Pacific head at Pacific Investment Management Co., said on Bloomberg Television today, quote, "You will see a lot of volatility in markets. We believe that confidence is improving, especially with vaccines coming online, so we'll see an uptick in growth globally. There are a lot of reasons to be confident in the market, but a lot of this is also priced in," unquote. Now, whilst US economic data is pretty light this week, with perhaps most focus aimed on the US CPI on Wednesday and the weekly jobless claims as always, the European Central Bank holds its monetary policy meeting, and President Christine Lagarde, that's President of the Central Bank, not President of a country, is set to do a briefing on Thursday. Now, we know that one of the largest influences on precious metal prices outside of the US dollar is also the move in the value of the euro, and how that stacks up against the dollar, and we shall be watching this very closely. Now, whilst most eyes today have been focused on Prince Harry and Meghan's interview with Oprah Winfrey, estimated in fact to be in the region of some 17.1 million US viewers, and as we're dictating this at around 2200 hours, close to that in the evening, it's currently on British TV, so viewers are watching this now, shares of Tesla Inc. closed lower for a fifth consecutive session today, caught in a tech-led sell-off that has wiped more than, wait for it, $277 billion of the company's market value over the last month. Also, Canada's Turquoise Hill Resources Limited posted a 41.4% rise in quarterly profits, helped by higher copper prices and increased production of copper and gold at its Oyu Tolgoi, if I pronounced that correct, mine in Mongolia. And the Governor of the Bank of England, Andrew Bailey, said, quote, "There is light at the end of the tunnel," as he pointed to falling coronavirus infections and a successful vaccine rollout in the United Kingdom. But he suggested the economy would need to adapt as people work and shop from home more than they did before the crisis. Those spoken to by the bank expected some degree of home working to become the, quote, "new normal," unquote. But he said it was not clear what impact that would have on the economy. Interestingly, though, last week, the Office for Budget Responsibility said the economy would recover to its pre-crisis level by the middle of next year, 6 months earlier than it had previously predicted. Meanwhile, it said unemployment would peak at 6.6%, lower than the 7.5% it forecast last November. And if I recall, I think Goldman Sachs made a very positive prediction on unemployment in the United States for this year too. So in conclusion, we're seeing that the world is beginning now to accept a recovery in global output and economic development. To what extent some of these factors are already priced in does remain to be seen. But that said, there is little at present to inspire higher gold prices for certain, and until manufacturing output significantly increases, silver will remain within that quandary of what we call the push-pull dilemma, of suffering reduced monetary demand, but looking forward to increasing industrial demand. Let's wait and see what tomorrow brings, but meanwhile, if you have any comments on what's been covered today, please gladly share them, and if you haven't done so, do subscribe to our channel. Thank you for listening. Until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.